Market started on a correction mode in the new year 2023, and that correction mode has almost continued during the first week of January. And that's where the investors are looking now at the performance expectations on one side and an analysis of how the markets have performed in terms of giving returns when compared to calendar year 22 with calendar year 21. So, the crux of our discussion revolves around how the markets have given returns to the investors on year-on-year basis in terms of calendar years, that is, the calendar year 21 and the calendar year 22 are the things that we are going to focus in our discussion today. Basically, when we see and compare the calendar year 21 with calendar year 22, what we can grasp at the first instance, and even when we go in depth also, what we grasp in detail is that there was a heavy sector churn that played in the market, and market though remained flat, but some sectors gained out of this churning, and whoever have smartly churned, they have gained substantially, but whoever sat on long-term investments in terms of certain sectors, they couldn't make money. So the name of the game in 21 and 22 happened to be churning out quickly the sectors for quick gains rather than thinking in terms of long term gains. So let's see what are all the sectors which have gained on YOY basis when we compare calendar year 21 and calendar year 22. There is a saying that goes, the more things change, the more they remain the same. However, when it comes to performance of benchmark index, Nifty 50 in 2022 and the underlying sectors, the more things remain the same, the more things actually changed. Let's see how. The index trading at a multiple of 12% premium to a 5 years average in December 2021 may have been one reason driving the near flat performance in the year 22. That is to say, 1% returns in calendar year 22 against 24% returns in calendar year 21. However, looking beyond the headline index number reveals sector rotation in play with changes across sector performance compared with 2021. Among sectoral indices, there were many ranking reversals from last year. That is to say, there were many rank reversals when we compare 2022 with calendar year 2021. 2022 outperformers are Nifty Bank and Nifty FMCG, which happen to be the worst performers in calendar year 21. While Nifty Metals has been a performer in both calendar year 21 and 22. Now let's see which are all the sectors which have outperformed. Nifty IT and Nifty Realty, which are among the weakest performers in the calendar year 22, were the leading performers in calendar year 21. Nifty Pharma showed weak returns in calendar year 22 and calendar year 21. Being able to pass on inflated commodity costs and barely protecting margin decline, Nifty FMCG returned 18% returns in calendar year 22 against only a 9% return in calendar year 21. Valuation premium has inched up to 8% in 2022 from a 3% premium in 2021. Nifty Bank has delivered strong returns of 14% in 22 while trading at 14% below its average valuations. The banking segment is facing heady trifecta of net interest margin expansion, credit growth, and lower credit costs following a long period of asset quality issues. That is one aspect on the part of banking segment. Again, when we look at metals, metal prices rallied in 21 and 22 also because they are aided by the easy monies following COVID stimulus fanned further by geopolitical issues. Nifty metals trading at 38% valuations discount in calendar year 21 also helped the index return 11% in calendar year 22 following 69% returns in calendar year 21. So having looked at the outperformers, let's now take a look at the underperformers. Nifty IT entered the year 2022 with a valuation premium at 63%, and after having returned 58% in calendar year 21 based on strong digital revenue streams, failed to perform well in 2022. With developed economies slowing down, wage inflation and attrition eating into margins, and with a high valuation base, the Nifty IT index corrected almost 28% in 2022. Nifty Pharma gained 60% in calendar year 20. The index, I mean to say, the Pharma index barely sustained the momentum with a 9% gain in calendar year 21. However, it gave up all those gains in calendar year 22 and it lost almost whatever it has gained in 21. That is to say, 9% it lost in 22. Some of the reasons for pharma's underperformance can be attributed to the return of FDA plant inspection issues and US price erosion impacted the sector a lot. However, companies with differentiated portfolios and India focus have managed to surpass the peers in the index though. Any further news on COVID resurgence that surfaced, in fact, in the last week of December 2022, can bring the focus back on the part of healthcare. However, the situation doesn't seem to be so because the COVID issue that cropped up in the last week of 2022 so far so has its restricted impact on China alone. Given the scenario, what's the outlook for 2023 is what the question that comes into our minds. That's where I feel that with Nifty 50 trading at 9% premium to 5-year average and with looming risks of recession in developed economies in 2023, sector rotation that we have seen in 2021 and in 2022 may continue to be the way to play markets in 2023. Hence, sectoral earnings growth and valuation premiums versus historical average may remain as key aspects to look at when we invest in 2023. Thank you very much.